the biggest story in the markets as we go through these summer months is what is going to happen with the U.S. situation to a large extent, and that is influencing, I guess, your decision-making here in Asia. So just give us sketch out your strategic position right now.
Well, we are starting to see some bits of good news, some green shoots. The most important factor, I think, is what Will was talking about a few moments ago, which is we think that U.S. bond yields have peaked out. We don't think they're going higher from here. We also think that markets have adequately priced in the amount of Fed rate hikes that will be seen. We think that the Fed funds rate will be going to the high 3% range, but markets are already pricing that in. That's in contrast to the past year when markets have generally been behind the curve and been too optimistic about how much the Fed was going to have to raise. On the negative side, though, we do see a very high risk of recession, and it would be very unusual for markets to rally in advance of recession. So I would be reluctant to tell people to be buying in aggressively now.
So, I mean, you're seeing a recession ahead, and you're not seeing a market rebound, but you also you're reasonably sanguine about we're close to the bottom, right?
I think that the worst is behind us. We probably will be bumping along the bottom, maybe a bit more downside from here. But I think the difficulties of the first half will not be repeated on the same scale in the second half.
Dan, so much emphasis gets placed on the US economy and its impact on the EM, impact on Europe if we do see a recession in the US. But what if we see the flip side? Because there's some pretty significant stagflation signals already over in Europe, considering the gas price situation and what that will mean if they begin rationing in terms of their economic growth outlook. And then you look at North Asia as well, with the likes of Japan, the likes of Korea, the likes of potentially China once they come back out of their lockdown in terms of the energy prices they're paying. So is there a little bit of a chance that there could be contagion coming from the other side as opposed to it just being solely driven out of the US in terms of some weakness moving forward?
Europe definitely is a risk. The European economy is going to be going through some very difficult times over the next year. The main issue for financial markets is fragmentation risk. What will be happening with bond spreads of the less robust economies of the South? Will the ECB be able to handle those risks? We think that they probably will, but that's going to keep markets on edge a bit for sure. As far as Asia is concerned, I don't see contagion coming from Asia. We look to be in better shape than either the U.S. or Europe. We don't have the same inflation problems. China, the economy probably has bottomed out. We've got some strength in other areas like India and ASEAN where economies are also on an upswing. So I would say the main risk is still from the U.S. and from Europe.